Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on TradingView with over 190k reputation points.
In this video, I will be speaking about GBPUSD. Now, as usual, to keep the video as educational as possible, first we will be focusing on the technical aspect of this market. Then I will be moving to the order flow by looking at the commitment of traders. So what the biggest institutions, hedge funds, and anyway, the non-commercials are doing in the market and how they're moving their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss.
If you're new to the channel, make sure to subscribe. This is the place to be for high quality, free trading education. Now, without further ado, let's jump straight onto the charts.
Starting here from the monthly time frame, what we can see is that at the moment we have a market which is just entering inside of a quite strong level of historical support and demand. In fact, multiple times the market tested this area and immediately it rejected it to the upside. And what we can see is that at the moment the market is approaching the exact same level from which there is definitely the possibility to see a potential rejection to the upside. So the monthly time frame seems quite bullish. We could expect some short-term bearish price action into the level and then a rejection to the upside away from this zone. Dropping down on the weekly time frame, what do we see? Now, from a weekly standpoint, we can see a quite strong impulse to the downside. At this point, what we could expect is a deceleration and then a rejection to the upside away from the zone. However, as the momentum to the downside is still quite bearish, we could expect still a bit more continuation to the downside and then to see the deceleration and the rejection to the upside. Now, the only way in which we can get a clue of where a potential reversal zone could be, we have to look left. And what we can notice is that this level here was the previous zone of accumulation from which then all this rejection to the upside started. In fact, here we had a massive bearish market, then we had this horizontal price action and accumulation of longs from an institutional perspective, and then we had the rejection to the upside. So since the market at the moment still has quite strong bearish momentum, we could expect a bit more bearish price action into this level and only at that point to see a reversal to the upside. And speaking about institutional longing, let's go and see what we have when it comes to the commitment of traders. So what hedge funds and the big players in the market are doing. Now, the first thing to keep in mind is that if we're looking at the data for the pound, we're actually already looking at GBPUSD because all currencies on the spot are traded against the USD. And what we can see is that with the last reports, net positions have been massively decreased. We went from having 70.4k net positions all the way down to 8.6k net positions. So clearly institutions have been moving back to the bearish side for the pound, decreasing their net positions, therefore increasing their shorts and decreasing their longs. In fact, shorts went from 40k all the way up to 63k from an institutional perspective. So they got increased of around 20k, and longs got decreased from 123k to only 71.8k. So clearly hedge funds do expect more bearish continuation for GBPUSD. So moving back to the technical side, let's continue with analysis and go down on the daily time frame. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find here on the screen and also linked in the description, so you never miss new updates. Now back to the analysis. If we go down on the daily time frame, what do we see? Well, from a daily standpoint, we can notice how the market has just broken below support. This level was previous daily support here. It then got broke to the downside. So this previous support is now acting as resistance here. We can also notice that after an impulse, if you want to measure the correction, you have to take your Fibonacci from the high to the low of the impulse leg, which gives us a 0.32 50% and 0.618 Fibonacci retracement area that is lining up exactly with this previous daily support. now turn resistance. Now, the fact that we have horizontal resistance and the Fibonacci levels both lining up in the same area of price means that in this area, as we have confluence of resistance, inside of a confluence of resistance area, there is good probability to see even more institutional shorting, since anyway, as we have seen, institutions have been shorting the pound and closing their longs. Therefore, if we have a correction to this area, what would I expect in a situation like this? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bullish to a bearish market, at that point, I wouldn't be surprised to see a potential push lower, completing this daily impulse correction and impulse pattern to the downside.
Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked both in description and on the main page of my YouTube channel. Here, you have the possibility to gain access to the most complete, all-inclusive mentorship program that I have created for you. As soon as you open the website, you will see this video breaking down everything included in the mentorship program. And in the program, you have the possibility to gain access to all my courses and also to the software, so the COT data software, which is exactly the one that we used in this analysis, the trading station software with Telegram signals integration, which puts together everything that you need as a trader all in one interface. You also have the possibility to gain access to one-on-one private mentoring directly with me, so you will have my personal contact. And if you continue to scroll down on the website, you will see that directly from the website, you will have the possibility to register and gain automatically access with the email and password that you will create during the registration process. So at least I suggest that you go and check it out right now. The link is both in description and in the main page of my YouTube channel, and I will see you in it. If you enjoyed the video, make sure to drop a like and also let me know in the comments below for any new pairs or topics that you would like me to cover in my next videos. And I will see you in my next breakdown.